All right, traders. Uh, if you, I'm assuming you can see me, and I've gotten some feedback already. It looks like you can hear me. So, welcome to the webinar. I'm Brian with A Plus Setups. If you're new, you're just checking into the webinar here or watching the YouTube video. Thanks for taking time out to participate. It's going to be a little short video today on or a short session on applying the reason, when, and how to a trade. So that's the philosophy that's guiding us going forward. 3+ years we've developed our setups, categorized them, developed profiles around them, and now we're moving towards taking those setups, got them on a shelf, and we need to start intentionally thinking about the reason that you're looking for a trade or your bias, when to look for a trade, and then how you're going to do it. So we've got the how figured out with all of our setups. So let's go ahead and jump right in. All right, so here is the disclaimer. Again, I'm not a financial advisor, so question everything that I tell you, and none of this is financial advice. So you can also lose not just everything you have, but more than what you have in the future. So you have to be very careful with this. And this is all for educational purposes only. All right. So first point is reason, when, and how. I think of this in terms of layers. So layer one is the reason. That's your bias. Now, you can take this concept. It doesn't just apply to intraday trading that we do. This is what I use in my swing trading. It took me decades to figure out that this is how I needed to trade, from a swing trading perspective, and, just a lot of losses. Everybody gravitates towards really nice indicators and things that, give you a good setup. Everybody gravitates that. They can understand that. But what is really hard to understand is when to use that setup. So I mentioned time and time again that, my setups in swing trading, they haven't changed in over 15 years, and they won't ever change. Once you have something that works, then you just need to focus your craft on when to apply it. And that makes all the difference in the world. So layer one is a reason, is a bias. And I'm going to show you what we use, a tool to use. There are many you can use, but I'm going to show you one example today. Layer two is when, and that's the timing aspect. So not only do you need to have a bias, but we're traders. We need to know when to apply that setup. And I'm going to introduce some tools to help do that. And then finally, layer three is the how, and that's the setups. So those are for us in the A plus room, we have our shallow, deep, deeper, and deepest pullbacks all categorized. It's the jiggle, reverse mullet, 108 EMA, and the puncture trade. So all of this comes together. And this is how I'm trading now. This is how I've been trading for since we transitioned, for the better part of 2 months. So it's a conceptual change, and it's required where we're at in our program development. So, but again, at the bottom of the screen here, you need to always ask yourself, and especially if you go back over your trades at the end of the day, which you should be doing, I'm taking this setup because of blank. You fill in the spot. Could be triple focus, bull bear environment, could be triple focus divergence, could be trend line breaks, it could be, your support resistance framework, whatever you use to give you the bias, the reason. And that's what's going to make the difference between just random trades and discipline ones. And you're only going to survive in the long run by generating a law of large numbers through a disciplined, consistent approach, taking the losses for what they are. It's just a loss, it's a trade. but your equity curve over time, you just want it to continue going up. It may not go up at the velocity you want it to go up, but that's just the way it is. All right, so this is the visual. You've seen this before. We're going to start in this visual. I'm going to show you how we transition to where we are. You can start either way. And what I mean by you can start developing your reasons, or you can start developing the setups. You can't really start in the middle though. So one of those ends, you got to work your way to the other end. So in this visual here, I'm going to work my way from building setups first. So those setups, once you get them built, they're on a shelf. They're ready. It's a demand element. So whenever you need them, you pull one of the setups off the shelf. For us, this is our inventory: the jiggle, reverse mullet, puncture trade, 108, piggle, at John Wick. So that's our inventory. Now, when they're sitting on the shelf, what triggers that? Well, it's the framework. The framework is the reason and the when. So when that causes a structural shift in the market, and then your setup is used. So some of the reasons and whens could be triple focus, bullish, bearish environment, the divergence. I'm going to introduce you to the timing windows. It could be trend line breaks. It could be trend, counter trend models that you have. But when all that comes together and you start looking at it from that philosophical approach, now you have right time, right reason, and right setup. And that'll prevent you from having or minimize, until you fully get on board with this, it'll minimize random setups. So it's setups plus framework equals edge. And again, setups are the how, and the framework here is the reason and the when. So specialization, we preach about that all the time. So you need to specialize, and then that will certainly help you on your road becoming more consistent. And that's what we all want: consistent, disciplined execution. And we just take what the market gives us, and then we go about our way. Now let's take this from slideshow to practical application here. Let me see if I can get this off here. Let's pull up a chart that I want to start with. Okay. Let's walk through the process. We have a blank chart in front of us. This is a Ninzarenko NQ 36.6 chart. Think of this as layering. So layer one is going to be the reason. It's your bias. Now let me find my point where I want to start here. Oh yeah, there we go. Sorry about that. So layer one. So you see here we have a blank chart. So the first thing I want to do is I want to develop my bias. That's where I look at when I'm watching the charts. I'm not watching my setup chart. I'm watching my bias chart, my reason. So here all I've done is I've used the A+ setups triple focus, the above and below zone feature that we have built in to define the intraday macro environment. So it's simple. When it's green background, it's bullish. When it's red, it's bearish. So if we're looking for trades, we want to stay within this framework here. So that's our bias. Now, the next thing we want to look at, we want to layer on, is when. So we're going to take and we're going to use there we go. I thought I put that on there. Layer two is when, and this is telling you when you can look for a setup. Now here at the bottom, we just introduced our Omega timing windows. It's this panel here at the bottom. And what this tells you is it's two things. So over here you see the green reason or the bias, layer one. Here's layer two. So it's a way to determine when to look for a setup. Now the panel is green. when it's, you can see over here, it's green while it's still red, but the minute they match, they mesh up. What this is telling you is that there's a potential uh, opportunity zone that's emerging. And once it latches on to layer one, now you have synchronization. Now all you're waiting for is you're waiting for a timing. So these timing nodes, these timing windows are just opportunities that pop up when there's certain things from multiple aggregation periods, we'll call it, that I've reduced down to one type of or a couple of inputs that typically have um, I want to say a higher probability of chance for you to have a successful trade. I have to be careful what I say because body will misconstrue as like, oh, you're telling us these things never lose. I'm not telling you that at all. So the white dashes tell you that, okay, green layer one, green panel preceding the white tells you now you can look for a setup. Um, Same over here for the red. You can see we're red, we get a white. You're like, man, that would have been a great setup there. But I didn't have confirmation. We're not trying to um, we're not trying to game every turning point in the market. It'd be nice to do that. Just looking for the high probabilities. That's what we're doing. So we get into this red zone timing window, but we just don't get any. We don't get a hit. We don't get the things aren't coming together. But when we flip back green over here at layer one, flip back green on the panel, and then we get a white timing window that says, okay, there's some things coming together in the background that you may want to start looking for a setup. And so then you pull your setup off the shelf. For us, we're either looking for a jiggle, a reverse mullet, a 108, or a puncture trade. All right, so that's layer two. Layer two. Then we move over to layer three, and this is where we pull our setups off the shelf. And this is the how we're going to take advantage of that. So all I did here, I used Markers Plus. Setups are by our A Plus Setups flagship model. And the signals, I generated these using Markers Plus. So all I did was I just factored two things in. I said, hey, if environment and if layer one and layer two are in agreement and I get a timing window, then look for a jiggle, look for a 108 EMA trade. I didn't put all of our stuff in there. I just wanted to put two setups in just to show you. So that's the logic behind this. So we get a bullish trade there. You can see it didn't take the trade here. So we get green again. So layer one, layer two in alignment. We get the timing window and we applied layer three. So this is a 108 EMA trade here. And so that's the layering effect. Doesn't get any more complicated than that. As we I could show you 1,000 of these examples. They're all the same. I mean, it wouldn't be 1,000 winners, but it would be 1,000, examples of this approach. And that's what I want to introduce: the philosophy, the concept, the application of this on a real life chart. So hopefully, um, flipping through this the way we did, hopefully that helps you understand. Big B. Yeah, I'll get to the questions here in just a second. Big B doesn't have a question about the trading stuff. He wants to know if there's a logo on the back of my t-shirt. It's funny. No, no, no logo yet. Big B. All right. Okay, let me get back to this. All right, we've already done that. Let me scroll through this. Why did it stop there, I wonder? All right. Um, this shameless plug. So we're done with the actual presentation. So if you're new to A plus setups, let me just go over how you can participate. So coming soon is going to be a 7-day trial. In the 7-day trial, you'll just be able to access our live trading room. We have the option right now. You can purchase all of our tools. You own them forever, and you'll have access. Once you purchase these, you'll always have access to the channel that you downloaded these from. And every time there's a revision or an update, I'll continue to populate it. Then it's going to be on you to come in there to check for revision updates and everything. But you'll get all of our setups, all the upgrades, and then of course, I dump in all the PDFs and instructional videos. Now, so that's separate. So there's also a monthly subscription. And if you want to participate in the monthly subscription, um, then this is what you will get. It's a ton of stuff. I can tell you there's more information in there. I'd venture to say probably 20% of people that come into the room actually go through everything because there's just so much info in there. Robert, I saw I'll answer all the questions here in just a second. But what I want to make sure, what differentiates this, I mean, you're going to get all these tools, everything, especially everything I showed you in the video, you're going to get that minus the only thing available that our subscribers are going to have that the tool owners won't have is access to our timing windows. Our timing windows are going to be only available for subscribers while they're subscribed to the room. The timing windows are really unique, and the best ones are coming. The best, what I consider the best two timing windows, are going to be released in July and August. Those are going to be exclusive to just the subscribers. But anyway, there's a ton of stuff in here to take advantage of. It's $35.99 a month, 5% off with this code. You get 20% off if you purchase the tools here using this code. Like I said, this is coming soon. One more slide here, and then I'll answer questions. This is how you can get in touch with us. There's a website. Here's the Patreon for sign up. And you can purchase, there's buttons on the Patreon site, and there's ways to access both of these models, the subscription and purchase on our website as well. So if you have any questions, just always drop me a line, at my email if you need any help. Now, all right, traders, thanks for tuning in. Hey, if I can help you out in any way, make sure you let me know, drop me a line. But as always, good luck in your trading. Hope to see you in the room if you're not there. Have a good one.